Well, good morning, everybody. How's it going? Hope everyone enjoyed your long weekend. Hey, John, how are you today? Thomas, Jack, JW, Bobby, Mike, Joe. Good morning, good morning, good morning to everybody. Are we ready to get this week kicked off? Hey, look. Morning, Don, Nancy. How you doing? I don't expect too much out of this week. I just don't see how we can expect too much. First of all, today's the first day back after a few days off. The market's going to be lost for a little while this morning till it gains some composure, I think. And then as we push closer into the end of the week, everybody's thinking about New Year's and whatnot. So I just don't know that I would expect great things out of the market. Sorry to be a downer on that, but I just really, really don't. Monday's a holiday, I believe that, so watch that. Okay, so what do we have coming out here today? Well, not much today yet. Tomorrow, we've got pending home sales coming out. Thursday, you've got some jobless claims, petroleum status. Friday, you've got the Chicago PMI number. And members, you all know how to go to the website to get this. If you don't, just let me know. We'll run through it. Real easy to do it. So if you like to see those numbers, you can go there anytime. It's always up to date, automatically up to date. So that's something to take a look at if you like. Also, I want to remind everybody that if you are a Hit and Run Candlestick member, make sure your app is working. I've got some alerts I'm going to be sending out today. Anyway, yeah, just make sure that app is working. If you do not get an alert, say the first 30 minutes of the morning, then your app is not working. If you are a member and you happen to be in the free room and you think that that is the members room, it is not. So I want to remind you that you can be in both rooms if you want, but you really need to be in the members room to get the most out of it. So, okay, let's take a look at a few here. Let's start with the market overall. This is my dark chart. I think it just tells the biggest story. Right here, if you're trying to decide, are you long or are you short, and if you want to go where the power is, you want to go where the market is. Now, not everybody does that. I understand that. That's cool. If you want to be a chart picker, stock picker, and look for those bullish charts when the market is moving down or vice versa, then there's nothing wrong with that. Just at least acknowledge that, okay? So here's what I call my dark chart. The red and green dots are the trend indicator. The white line is the T-line, 8 exponential moving average is what it is. And you can see right here that with the T-line below the trend indicator, and the trend indicator being red, the power is to the downside on the SPY. You can see the Qs are the same way. You can see that the diamonds are the same way. You can see that IWM is the same way. So the power, the market overall is weaker than stronger. So that's something to take into account when you're looking at some trades, okay? I'm going to come back over here. Let's take a look at a couple of charts. XLE, if you're looking at some longs, I notice there's a few energy that's still holding up, and XLE is looking pretty good here as far as that goes. Let me get my pencil out. There we go. You can see we've got these highs, and we push down into a low. We push to a high, push to a higher low or double bottom. And now you can see we're making this bullish W pattern here. So what I'm going to look at is possibly being bullish on XLE over 87.50 here. That's also just above that is the 50-period moving average, and that starts to push you up into some resistance. So just because it breaks out might not be a reason to buy. If it breaks out and tests and then starts to move up, that might be more like what we're looking for. And, you know, again, this week might be a little bit, just a little, I don't know, slow or lethargic. You know, where's the energy? Where's the energy? And that may cause some issues, so we want to watch that. Let's take a look at SQQQ. And for that matter, there's a lot of inverse ETFs that we could look at right here that are still quite bullish. Let's take a look at that dark chart, just like we did on the SPY. You can see that is bullish. If to prove this, just go back in history and look at the white line, green dots, white line, green dots, white line, green dots, white line, red dots, white line, red dots. Just take a look at that. And you can see the money that could have been made when this started to turn green and the white came over the green. You can see the trend right there, and that's where money is made in a trend. Same to the downside. You can see where the white line crossed below the red dots. Red dots remained red for a period of time. And it's, you know, when we start turning red, those early signs, 1, 2, 3 dots, maybe even 4 dots, that's where you start looking for those setups, those pull-ups to the short side to bring you back down. Just the opposite to the upside. Well, here we've turned green, white line over the red, green dots. Now we may be looking to the long side of the inverse ETFs. Now the inverse ETFs, if they're moving up, that means the overall market is moving down. It's just the way it is. So if you're looking for a long, you want to, but you feel the market is short, for whatever reason you can't short the market. A lot of accounts that can't do that. A lot of people have no interest in shorting the market. This is a good way to look at it. And there are a lot of inverse ETFs that can be traded this way. Another chart that I'm watching here is FedX. FedEx had earnings all the way down. It earnings, and it just slid right down that 50-period moving average, and it's trying to pop up right now. So I'm watching this FedEx over 183.65. We get this breakout here. The next target should, right in there, put us about 197. So I'm going to be watching FedEx very closely for an entry, whether or not it is today, tomorrow, or even this week for that matter. We just don't have to run out and trade some days. You guys know I say that. And this week is maybe one of those weeks where we just enjoy ourselves in the room and education, maybe talk about our trades, things like that. I want to look at one here that I see coming up on the scanner, SARC. Okay, I didn't know that gap down. So gap down started moving up. So big old gap to the downside. That had to be something going on there. We'll come back to that one. Right now, I don't see much of anything else. Nike might be one for some traders to keep on your watch list. Long as it holds this this low over here on the 22nd, 114.20ish. Long as it holds in there, Nike might be setting up for that next leg up to the upside. This would be a great gap and trap for those that follow the gap and trap on the scanner. Okay, that's all I've got for this morning. Remember your app. Make sure your app is working. And for those that don't know, you do not have to be in the room for the app to work. However, you do need to log into the room at least one time every 7 days to keep the app active. So you can go to the dentist and you can get alerts, if that's one where you go, and two if you want alerts. So make sure that's set up. Make sure if you don't have a alert within the first 30 minutes of the market after the market opens from hit and run candlesticks, please check your app and make sure there's something not broken in it, and we'll certainly see what we can do to fix it. All right, everybody have a wonderful, wonderful day. I'll see you back here in about 30 minutes when the market opens up, okay? You guys all take care. Thanks a bunch. We'll see you.